Good afternoon. The editor, Richard Gill, asked me to give this talk the title of A Year in the Life of Evil Knievil. And I've gone along with it since it allows me to say absolutely anything without causing the offense of irrelevance. So perhaps you'll allow it to come along on that basis. That noted, I sometimes think as I look ahead that nothing new will happen. But the reality is that it always does. That's the remarkable thing about the stock market. It always surprises you. I am sure that I am not alone in declaring my amazement that quantitative easing continues now into past its 5th year, both here and in the United States. I would mention that, however irrationally, I slightly excuse the Eurozone from this review, since everything about the Eurozone strikes me as potty. When this disaster of stealing money from taxpayers to subsidize impecunious borrowers, I was rather depressed, since I've always taken the view that wisdom dictates that one should keep one's debts under control, so that when the inevitable rise in interest rates occurs, one should be able to claim that one has taken steps to live with the change. It seems to me, and I'm sure that I am not alone, that those who have behaved unwisely have simply been let off the hook. God alone knows why. As I understand matters, the government takes the view that homeowners with large debts, particularly those with very large debts, should be subsidized by ludicrously low rates of interest. This arises, of course, because the contracts between these lenders and borrowers are all based on Bank of England lending rates, or what used to be known as the minimum lending rate, which has been set at 0.5% for at least 5 years. This has had the main effect, as we all know, of keeping up house prices above where they would stand naturally, and it also allows the clearing banks, who found themselves in a mess, in effect, to have money made available to them at virtually nil cost. In practical terms, these banks have subsidized loans which they are turning into a huge profit by lending it on at exorbitant rates of interest. The result, of course, is to repair the balance sheets of the clearing banks by covert subsidy. I'm not saying that this is necessarily wrong, since the overriding consideration of any government is to do the best it can to bring the economy into proper shape, starting with where it finds the economy. And I don't need to tell anybody here about the mess left behind by New Labour in 2010. But it will be hard to escape the conclusion, as reasonable, that the way to profit is to work out the most stupid way to behave and then presume that that must apply. Anyway, it's not going to apply forever, and it seems to me certain it'll come to an end. It has to come to an end. It is the upturn in the economy to which this policy of low interest rates has contributed, which will cause a buoyancy of demand for loans, which in turn must mean genuine demand has come back into the system. Presumably, feckless homeowners, and by feckless, I mean those who borrowed considerably ahead of their ability to repay, will find that they face a burden which many of these such borrowers will simply be unable to meet. I'm not sure where this leads. Here in London, there has been the special factor of incoming capital, sometimes properly regarded as flight capital, from overseas looking for a bolt hole and the civilized way of life that London represents. It will be extraordinarily foolish to deny the benefit of such an influx, but it surely must peak, and I think we're there. Having got the housing market in central London wrong for now 29 years, I should perhaps keep my mouth shut. However, I am told that rents are flatlining in central London and that overseas buyers of central London property are backing off. This is much to be desired in one sense. Equally, I hesitate to say that it would necessarily have a beneficial effect upon the British economy as a whole. It is, of course, possible that a revival of the British economy, which has undoubtedly taken place this year, and Osborne has been right to hold his ground and he's pulled it off, may reasonably be expected to continue in the coming year. There's a momentum which I think the Treasury has nicely lined up as we arrive at the general election for 2015. This revival must be beneficial for profits of one description or another, and that in itself will be bullish for London stock markets. However, it's hard to see how rising interest rates can have any other effect than to cause investors to hold back from the market. That is the position that surely we now face. Needless to add, it is quite impossible to consider London's markets without considering what is going on in North America. Surely there is evidence, overwhelming evidence, of grotesquely overvalued stocks, particularly on NASDAQ. In the circumstances, it's much easier to foresee a retreat rather than a rise. So we may, in a sense, be heading into a perfect storm when American investors are withdrawing from capital markets, so generating a downdraft for London, whilst paradoxically, our own economy is buoyant, thus causing exactly the down result for our domestic investors through higher interest rates. All of which brings us, or brings me, neatly to the central theme of my working life, and certainly an interest for many, namely what to short and how to do it. It seems absurd that there can be any question as to considering how to do it, but ever since the 2008 crisis, technically, matters have changed. For instance, borrowing stock is a great deal more expensive now than it was then. If I were to be absurd, I would say that it is all down to Gordon Brown. But the truth is more prosaic. Banks, who are the principal risk takers when lending stock, have simply lost the willingness they once had. As it happens, I think their conservatism is seriously misplaced. But it's their money and their risk, and I'm afraid we have to live with the consequences. Further, I'm afraid that the contract for difference firms, who of course form the basis of the trade of spread betting firms, have taken it upon themselves to arrange substantial uplifts in borrowing costs, which they foist upon their customers. One can, of course, challenge them, but they are frostily indifferent. I used to run short positions for years. There was nothing short-term about it. I simply alighted upon stocks which struck me as overvalued, and I stayed short, met the margin calls where necessary, and ran the position for a long time. For instance, I was short of Pursuit Dynamics for 8 years before it finally went to zero. That gives you some idea of why I claim that I'm a long-term investor and disinvestor. My borrowing costs were negligible, and indeed there was also the possibility that the short rebate, i.e. interest earned on funds released, would exceed borrowing costs. No such serendipity exists today. The effect is that the sensible fund manager, who is perpetually confronting the argument as to whether he should be in cash or in the market, knows that if he elects to be liquid and then on top to short stocks, is incurring a very high expense. I do not know how much it is. It certainly varies, but it can nowadays be between 5 and even 20% per annum. And when I say 20%, it could be 20% here in London, where the same stock is 1% or 1.5% per annum to borrow in the United States. That's how bad things are in the market. There's no proper competition or clearing of rates. It certainly militates against shorting. Of course, it will all change one day, but I can see it's going to be some years before that happens, and thus a more sensible arrangement obtains. I may add that I think the more sensible arrangement will be sooner obtained if there were to be some public forum, an internet-based site showing borrowing costs stock by stock. But no one has yet had the wit or economic incentive to provide that. I recently asked an employee at one of the major banks which provides stock lending facilities, and she, an highly intelligent woman, advised me that the market is opaque. What she meant by that is that on behalf of her employer, she gets away with what she can. I thanked her for her candor, but decided that it was a warning as to how matters are handled in practice. This is very irritating if we are, as I believe we are, on the cusp of a serious downturn in the market. There is some debate as to what is and what is not a covered short. And certainly, virtually all agency brokers have ceased any form of shorting, partly because they cannot monitor positions, and partly because they have declared themselves to be fantastically lazy. They are encouraged in this by regulators who are generally ignorant, grossly overempowered, and essentially useless. But the opportunity to profit by shorting remains. And fortunately, there are some brokers who are still prepared to attend to this business. Incidentally, as of Monday, the 28th of April, not long to wait, there is no stamp duty paid on purchases to close AIM shorts. This will improve AIM liquidity by that little bit, which in turn, of course, causes more liquidity. And I remind the Assembly that AIM is where the profit is. Incidentally, whilst commenting on settlement procedures on AIM stocks, I wonder if I may again request anybody who cares to listen for a review by market makers and, most importantly, spread bet firms to regularize settlement of suspended short stock positions. The differences are ridiculous and needless. They cause unending correspondence and frustrated anger. I propose that some spread betting association committee agrees a zero settlement, and if it wishes, offers some approach whereby the market can buy back the stock at option for nil at a nil cost. That will take some coordination, but I certainly think it ought to come. It's not beyond the wit of man. I remember some years ago writing to IG Index, who were in charge of the Spread Betting Association, later deciding that the Spread Betting Association is in fact a dustbin in the corner of IG Index. But anyway, that's slightly rude. I'm just telling you, the reality is there's great resistance to working through to coordinate for a settlement. As ever, the really big opportunities lie in the United States. One reason is the insanity of the US retail investor. This special brand of kamikaze trainee constantly throws himself to destruction when purchasing grotesquely overvalued stocks. Incidentally, I call him a kamikaze trainee since he is not dead yet. True qualified kamikaze pilots are dead, so they can't buy any shares. I may add that the great advantage of having an America full of kamikaze trainees is that they go out to earn more money, so to renew their kamikaze behavior. For this, we should be grateful. However, one can get these opportunities wrong, as many a bear will testify. The truth is that quantitative easing has majored in the US, as I've mentioned earlier, and the adverse results for the bear have been pretty shocking. Take Questor, that's QCOR on NASDAQ, whose results, incidentally, are on Monday. They'll be out before the Wall Street opens. I thought it had finally broken down for about $65, when quite suddenly an offer appeared from Mallinckrodt. It's some Alsace-Lorraine-derived name, ticker code MNK, came, and the offer was a stunning $30 a cash a share for Questor, and Mallinckrodt paper to make up the difference. Mallinckrodt, incidentally, is now about $67. I have looked into this and been assured that this is just a financial engineering job. Quite how the bankers went along with this, I do not know, although I expect they were and will be paid. Nonetheless, the end result will be the same, the collapse of Mallinckrodt paper. That seems to me, and you must take your own advice, to be a cast iron short. Tesla, TSLA, on NASDAQ, is different from Questor in that whereas the latter is based on a fraudulent product, Tesla's buoyancy is entirely caused by kamikaze trainees. The grounds for suggesting overvaluation are too well known. But I remind the Assembly that Elon Musk, who I'm sure is deriving or developing some sort of aftershave with a name like that, he's the boss of Tesla, and he thinks the price was too high when it stood at $140. Why does anybody want to pay $200? Search me. It's the kamikaze trainees hard at work. As I look back over the last year and looking forward on the London market, I freely admit to having made an absolutely colossal error with CPP. It was not the case that I was wrong on my analysis of the balance sheet or its trading conditions. It was that the founder of CPP, one Hamish Ogston, said that he was looking into an offer for CPP. And that offer was going to be of the order of 1 penny or less. So I loaded up and sold about 5 million shares short, and things subsequently developed as they have. The mistake I made was that Ogston and Schroders owned about 75% of CPP, And had the offer gone through at a penny a share, they would still have had to persuade other shareholders to just chuck their shares out at a penny. And for that, there was never any chance of CPP minority shareholders yielding ground. So that was why Ogston did not bid, and that is why I made a mistake when the board of CPP managed to get some extended life into CPP. It's certainly the worst mistake I've made for many years. It cost me about £500,000. So it is possible, however hard one does one's work, to make a mistake, and I've done it, and I freely admit it. There's nothing to be done about it. The money's lost, and that's it, finish. I still think CPP is a sell. I don't see how they get out of their present jam. And it's interesting to note that at long last, Ogston has started to sell his CPP holding. So, although, if I may say I was right all along, I wasn't right at the right time. So, there it is. Looking elsewhere, I still think that Pure Circle is wrong. The shares are now about 600 pence, and the problem remains that they have got well over a year's supply of stock in the balance sheet. Well, that's all very well, but really stocks should turn over more quickly than that. And I think it's only a matter of time. Next month, 6 months' time, I don't know, before Pure Circle breaks down. It's important to note that it's very expensive to borrow Pure Circle stock. I've been quoted 25% per annum to borrow Pure Circle, and that's all very well, but if you think about it, that's paying 150 pence a year on a consideration of 600 pence. That's very high. It gives you very little room for error, if indeed it gives you any room for error. I'd rather think it doesn't give you room for error. Next, that said, you can sell it on an agency sale through certain agency brokers prepared to do that. And in effect, the market supplies stock. And I think that's probably the way to do it. As some will know, I've been attacked by lawyers for Globo, ticker code GBO, on AIM. I'm tolerably sure that there's something very, very fishy about Globo. We'll have to see when the results are out, which I'm told are next week. And I certainly know that there are people waiting to pounce on Globo as soon as those results are out. I wouldn't put you off selling it before the results, but I wouldn't be in a great hurry now with the stock at 46p. Don't forget that when the directors had an opportunity to buy new shares at the placing about 6 months ago, actually, they sold stock. So whenever the directors tell you the share price is very attractive, you have to ask yourself the question, why were they selling? It's not very clever, but that is the position on it. Avanti has now been with us as a short for 2 years. It's raised a loan of the order of $350 million at a rate of interest which is double that which applied to their previous loans. It just simply isn't possible for a company that is as successful as the directors of Avanti keep on claiming to borrow money on that basis. It surely indicates there is something dreadfully wrong. It's true that my latest position was mainly opened at around 225, 230 pence, and the shares were closing last night at about 295. But I don't believe the directors when their rather confident outlook on Avanti. Until they've shown that this is genuinely a cash flow positive company, I'm working on the assumption that it isn't, and I expect it to break. That might be 3 weeks' time, or it might be 3 months' time, but that, I do think it will break, that's for sure. Finally, and this is something quite interesting, I say finally bar one. That's Green Dragon gas, which, as some of you know, is going for shale gas in China. They recently announced a deal with China National Oil Company, and that saw the stock up from about £3 to about £6 at one stage. They finished at £5.50 last night. However, I've been on the phone to Beijing, and it's quite clear to me that there are questions yet to be answered on Green Dragon gas. It's difficult to borrow stock, but I certainly think it's a good bet to go down on, say, a 3 to 6 month view. And what is more, Macquarie Bank have prepared a report showing that the shares are worth $20 to $40. That strikes me as twaddle to interest some of their customers. It's really got nothing to do with truth. Anyway, we'll see how that one unfolds in the coming days and weeks. Finally, it will not have escaped the notice of some that the lawyers for Kinevil are very angry with me. And they are after a coordinated attack upon the share price of Kinevil. Well, I suppose in a sense that all sensible people are in alliance with gravity. And it's gravity that's working away at Kinevil. As to when the next lurch comes along, I don't know. But there are very severe questions to answer about this company. The fact is that it is, to all intents and purposes, cash flow neutral. And that is astonishing, because they've reported huge profits. And although they say they've been investing the profits and expanding the business, the cash just isn't coming through. Now, if the cash comes through and KPMG says it's there, then I'm prepared to change my mind. But being a betting man, I'm staying short of Kinevil. Anyway, there you have it, ladies and gentlemen. If you have any interest, I will be taking questions at the back. Not for long, I hasten to add, but I will be. And that, I think, is my contribution for this afternoon. Thank you very much.